Yeah, I think for investors, it's not a really big shock. And AA plus is just the new AAA. You look at it from a relative point of view, there's nothing else that is able to take away from the U.S. Treasury market. You're talking about $25 trillion. It just can't fit that anywhere else. So I think for the market, they'll brush that off and it won't be a big deal. More concerning for them is where the economy is going, especially the Chinese economy right now. More interesting for them are the earnings, which is still going on right now. That's really where the focus is, and not on that macro stuff for now.
Fitch is really pointing out Washington's brinkmanship on the debt ceiling and the fiscal deterioration over the next few years. So is there a risk that we could see other ratings agencies also following suit here, or is this a one-day story in your view?
In my view, it's probably a one-day story. The fact that politicians are a little bit dysfunctional right now, it's happened for the last couple of years, and not just in the U.S. So I think markets are used to that right now. Volatility is low in the markets. Most investors are short volatility. So maybe if there is a little bit of volatility from a couple of bad earnings, maybe tonight, a bad job reports on Friday or something like that, there will be some de-risking a little bit, but not much. And I don't think the news from Fitch is going to really play a big hand on that for investors.
Right, and we're already seeing de-risking playing out across Asia, at least today. But to put this into context, the S&P is at a 16-month high. MSCI Asia Pacific Index also tracking at what is a double-digit gain for the year, or very close to it. Where do we stand in terms of market sentiment and direction? Do you think this most recent bull run that we've seen has legs, or is this the start of an August reality check?
I think it probably still has legs. So sentiment, was very high in May. It fell in June and July, but it's recovered a little bit. It's back to about neutral right now. The problem in Asia is obviously the fragility of the economy here and the link to China. If we don't get some serious stimulus packages from the Chinese government, this will always be a drag for Asia Pac. But the U.S. is still making the best case for investors. Sentiment there is neutral to positive. We have low volatility. We have good earnings. We have a resilient economy. Volume has started to spread out. It used to be limited to just two sectors. It's now spread out across maybe 7 or 8 of the sectors. Only energy and utilities are a little bit weaker in terms of volume. So I think investors are looking at the U.S. market as still being the leader for them, and the Fitch news is not going to change that.